Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome. This is Brandon Wendell, Chartered Market Technician. And I'm going to do a little analysis on the U.S. equity futures. And hopefully, it gives you a little insight as to what I'm looking at for this week, starting November 28th, running into December, final month of the year of 2021. Anyway, we had a peak in price back on November 22nd on this 4-hour chart back at about 10 a.m. So zeroed out everything there because that was the peak of the market. And what I want to do is take a look to see who's leading us to the downside. As you can see, it's the Russell by far. So for the most part, if we're going to continue to slide downwards, unless the Nasdaq takes over, which it has in the past, then the Russell will pretty much be giving us our cue as to when we're going to bottom out and start to move back up. So we'll look at that as our leader, and we'll get to that one. The Nasdaq was the strongest market and pulling us up very dramatically. With actually the Dow was kind of the laggard for a while, but things obviously have turned, and now we're going to be focusing on the Russell to the downside. The ES is actually emerging as the one that's not moving down quite as fast as the other markets are. So jumping in, actually for the ES first, and we had some warnings before the markets turned south. I'd already talked about this and basically said, we had the negative divergence, and we need to confirm with a lower low and lower high on this candle. About 3 weeks ago, we got that. So the negative divergence was in, and this is just the follow-up. So we've retraced down. We expected it to move down, and it pulled back to a 38% retracement. And you can see this is not really a good demand zone, but it was the area where we paused and then kind of resolved price by moving upwards very quickly. So could this act as a bouncing point? Well, it's not strong demand, but it is an area of interest because of the fact that we are hitting a retracement value or near the area where the bullish pressure began again. And we're also not below 40 on the RSI, but we are pointing almost straight down. So we got to keep that in mind. There's another little pause point right here at the 50% retracement as well. You see rally, base, rally. And we'll if we obviously break this one and get a close below 45.82, then I would expect prices to drop down to the 45.34 level. But I need to close below that first. Next, on to the 4-hour chart. Somehow I seem to have skipped the daily here. Let's see what happened. Oh, that was a daily. Sorry, I didn't do the weekly. I did the daily there first. Anyway, on the 4-hour chart, what we can see is I had that trend line drawn out about a week or so ago, and we obviously broke the trend line to the downside. And we had warnings again with the daily chart. We also had divergence here before we broke the trend line. Notice prices were going up while the indicator was moving sideways. That's that negative divergence that basically told us we were going to start dropping. Now we've got a confirmation of the trend reversal altogether on the 4-hour chart, because after that negative divergence and trend line break, when we tried to rally up to a high once more, we couldn't even get the RSI above 60, so therefore we collapsed. So that high being put in last week told us we were getting ready to sell off the way we did, and there's no fresh demand until we get down to 45.42 on the 4-hour time frame anyway. So it looks as though we're going to continue to push down. This may have been tested already, which if that's the case and we continue downwards, then our actual target would be somewhere around 44.59 and a quarter. Dropping down in the 60-minute time frame, we are getting a little bit of a positive divergence where we make lower lows in price, higher lows on the indicator. That's suggesting we'll get a bounce. We did a pretty good job selling off on Friday, and therefore we're probably going to get a little bit of people trying to pick the bottom. I don't believe this is the bottom of the downward move, but it's an opportunity if you do counter trend trades, trade the long until about 46.53 area, maybe a little below that, because that's your next level supply here on the 60-minute chart that could cause price after a small bounce to continue to move down. We might only get in the 46.20 area before we start seeing that selling pressure pick up yet again. Jumping over to the Dow on the daily chart, what we're seeing here is a couple of zones that I'd put out, and you can see we tried to bounce off that zone last week. And unfortunately, when the big news hit about the COVID variant Omicron, it pretty much sent prices right through all those zones. So we've got a lot of weakness here. Not only that, but we can see we tried to make a high and couldn't get above 60 on the RSI. It's extremely bearish. Took us down into bearish territory below 40 here. Did a small bounce off the 78.6% retracement, but that's not going to be enough. This is going to continue to push downwards, I believe. And our next area of demand is 34,343. I easily see that coming up possibly this week, maybe beginning of next week. So looking at the 4 hour chart, you can see the same picture going on. We don't really have a great zone anywhere, but we may get a pullback from this area that we're experiencing. We can look at a smaller retracement area for that. Um, but as far as this chart goes, we're definitely in a bearish trend. You can see we've had multiple peaks here where we can't get above 60 on the RSI. We have no problem going below 40. So it looks like that's going to be the trend that continues for a while because the Dow is extremely weak. Down to the 60-minute chart, we pretty much have the same kind of picture we had on the ES with a supply zone here at 35,276, 35,338, and we're waiting for us to hit our demand at 34,474. So prices were diving while the indicator was pretty much going sideways and flat. That's a positive divergence. This should lead to a little bit of a bounce. And what I should have done, I forgot to, I should put a Fibonacci extension from right here to the low, but we don't know where we're going to be starting our move up. But once that low gets put in, we start moving up. You would use this point, that candle right there, this red one, and that's where you'd start your Fibonacci retracement. Then you put the other mark at the bottom where we start to turn around, and that should give you some possible targets for where you can get short again at Fibonacci levels. The Nasdaq had been the leader to the upside, and it just plain gave up. You can see that we had a negative divergence. We pretty much ran right into the 61.8% extension from our previous impulse. This was our previous impulse here. We corrected impulse. And honestly, if you're an Elliott wave follower, kind of see that we had a little ABC wave back here. This is wave 1, 2, 3, 4, 5. Now we're in A. We should get a B pullback and then a C continuation down. I believe that might be a nice zigzag coming down. Give us a bounce somewhere above 15,463.50 if we continue to push down. We'll get a little bounce first, just like we will on the other markets. This actually is still bullish. We haven't gone into bearish territory on the RSI at all. Down to the 4-hour time frame on the Nasdaq, definitely seeing weakness. Again, we had this huge divergence where prices tried to make those higher highs, couldn't do it here on the indicator. We rallied up in price and barely made an impression on the RSI. So not enough momentum there to sustain that move up, and we break to fresh lows. So it was all predicted, that Friday sell-off that we saw. And it wasn't as bad on the Nasdaq as it was on other markets, but bad enough. And there's no demand on the 4-hour really until you get to 15,390. So that's what I was saying. You've got this kind of A, and you're going to expect a little pullback B, and then a continuation C. It's called a zigzag or a flat. So if we have a zigzag, what should happen is we'll rally up a little bit, but not make it up to the prior high, and then we'll zigzag down, most likely to this target. If this becomes a flat, then we're likely to retrace all the way back up to the prior highs before retracing down to the low, and then continue our move up again. So I'll keep in mind what's going on there and kind of call that out as I see it. Down on the 60-minute time frame, you can see we already did retrace back to an area of supply, 16,287 to 307.50. There's another fresher area above. If we happen to pull back, we should get a little bounce because we have a positive divergence right now where prices are moving down on less momentum. That's usually causes prices to push back up just a bit. So we should get a positive divergence there. Or sorry, we do have a positive divergence, and we should expect a bit of a bounce. And finally, our leader to the downside right now, the Russell 2000, looks extremely weak. This one didn't have any warnings, but again, it was kind of following what was going on in the other markets. The Nasdaq was the leader and told us we were going to start moving down. So this just kind of followed, and now is the leader down. So we'll look for it to figure out where we're going to bottom out. So looking at the daily chart, we just see weakness here. Obviously, we had a big move to the downside. Probably going to retrace as well a little bit, but we'll need to take a look at a smaller time frame to see where and when we're going to bounce. Looking at the 4-hour time frame, we don't have any demand nearby. You can see we tried to pull back a little bit, but then fell and closed lower for the day. We actually had our lowest close on that 4-hour candle at the end of the day. But we may retrace a little bit. Starting out on Sunday, going into Monday, we're starting to see a little flattening of the momentum. Keep an eye on that. And unfortunately, there's just nothing here to be able to tell exactly where we're going to pull back to. If we start making some moves up, I would throw in the Fibonacci starting from this top of the red candle to the bottom of this red candle, that wick, and the retracements will tell you most likely where we're going to pull back to. Let's see if I go out to my chart and I can put in RTY Z2021. There we go. I was getting ready to look at some other markets here. We can go all the way down to that 240-minute chart for a moment. Like I was saying, you can use the Fibonacci retracements starting from the beginning of that candle down. And there you got some numbers now that we can deal with for that retracement. 50, 23.6, 38.2, 50%. You can see when we initially bounced, we went up just sort of a little over 50%. And even if we take it down to a 60-minute time frame, well, now we start to see a little bit of supply that's popping in there, but that supply zone may have already been used. So we almost have to use the wicks, but if we didn't, it's pretty close. There you go. You can see we retraced where we did because there was really just that pause right there. So you had drop, base, drop. And if we do, maybe this is the end of the retracement. Maybe we're done. We're not seeing enough momentum to really push us higher at all. But if we do retrace, we could go anywhere with one of these levels before we start turning back down again. Heck, we can drop this down to 15-minute time frame to see if there's any kind of, not really much there for any kind of zones. The only thing we have is what we just formed. But this is not confirmed yet as a zone because of a couple reasons. One, we have rally, base, drop, but you didn't break out to a fresh low, and you also don't have any follow through yet, so you can't use that as a zone necessarily. So that's pretty much what I'm seeing on those equity markets. I don't really have anything else for you. We'll keep an eye out for that, but as soon as we start to see enough bullish activity in the Russell, that's when I'll look for the markets to be bottoming out and looking for more opportunities on the long side. But as of right now, I'm pretty much seeing the rallies as a new opportunity to get short until we hit some of those higher time frame zones. So until next time, trade safe, trade well, and take care, everyone.